Palantir also reported they were profitable in the quarter. That's because of a big boost in other income, which I thought was quite interesting. But otherwise, they're actually growing quite well. They are at a 22% operating margin. They did come in a little bit soft on the guidance for 2023, 2.205 billion versus the 2.28 expected. Still though, free cash flow sitting at 75.8 mil in the fourth quarter. They're coming in with an expectation of revenue of 508.6 versus 505 in rev. Okay, let's take a look here at a brief moment here into their investor relation sheet. Commercial revenue actually growing more than government revenue growing. It's actually one of the big things that you want to see continue at Palantir. You get a little bit more transparency with that commercial revenue than you do that government revenue. And you can see here that overall company revenue growth of about 17.5%. Margin slightly weaker on cost of revenue, but basically stable compared to 2021, coming in at 20.5%. And they did have a loss from operations, but they had that boost there of about 44 mil from other income. However, this is now getting a lot of folks excited that Palantir now officially will no longer be deemed profitless tech, and instead could be deemed profitable tech, which has a lot of people very, very excited. Palantir has obviously been something that's been heavily covered, especially on social media. And so the fact that now you've gone to a positive net income compared to a very long period of losses has folks very, very excited. Now, something that we can do quickly is just try to understand the valuation. Usually we do stuff like this on a daily basis. In fact, we actually go substantially deeper into fundamental analysis in the course member live streams. Remember, we've got the flash sale going on, link down below. It is a 69% off a flash sale for Valentine's Day. But anyway, coming in at an expected 19 cents of earnings for 2023, and a stock that is currently in pre-market up 18% at $9. You're looking at a stock that currently is trading for about 47 times its earnings, sitting at about a 20% growth on a revenue, which is not how you're supposed to calculate PEG, but that would put you closer to about 2.5 times PEG. If that were to translate directly to EPS, you'd be about 2.5 times PEG. However, if we expect that growth to be somewhere around, it looks like Wall Street's thinking about closer to 24-25%, you're actually sitting at closer to about 1.9 times PEG ratio. So as long as they stay profitable, it's actually not too horrible of a multiple. So that gives us a little bit of intel on Palantir. So congrats to those of you investing in Palantir and looking out for Palantir. I'd say other important things, obviously, to pay attention to for Palantir is, hey, how sustainable is some of this other income? Do we even need it on the basis of projections to keep going and to stay profitable going forward? You can also jump over and look at their assets. You've got assets right now sitting here. Look at this cash, folks. $2.6 billion of cash sitting around at Palantir. I mean, that's phenomenal. That already gives you plenty of buffer. But that, talking buffer implies that you're actually spending cash, right? Well, we can go to the cash flow statement. I love me some cash flows. And even though they had an operating loss, their net cash provided by operating activities, because of the software as a service business, a business that basically takes 80% of their revenue to gross profit, which is really, really incredible. What you end up having is you have net cash provided by operating activities here of around $223 million. So you've got this company, Palantir, that's actually printing cash from operations. Really, really good. In fact, the reason you have close to a loss is because the stock-based comp for the year ended in 2022 here was $564 million. That obviously comes off of the share, or it's basically share dilution. So if you're an investor in the shares, it dilutes you. But it doesn't actually affect the cash position of the company. So why companies love that. If you look at free cash flow for the year, you could just subtract PPE here, that's plant, property, and equipment. You've got over $180 million of cash flow for the year of 2022, which really absolutely incredible. And the expectation is that cash flow is going to continue. So really, you have the opportunity here to increase your cash without taking on more debt. I don't actually, let me see. Let's see how much debt they actually have. We got some payables and current liabilities here. Quick math, that's about 210 mil. I'm not going to count deferred rev or cust deposits or lease liabilities. So you've really only got about $210 million in current liabilities here. If we look at non-current liabilities, you've got maybe another $12 million. Holy smokes, the capitalization structure of this company is actually extremely good. I mean, you're looking at under 130, 120-ish. Call it less than $150 million of actual current liabilities that aren't like customer deposits or deferred revenue. You've got cash, just straight up cash sitting around of almost $2.6 billion. On top of that, you got some marketables over here. Who cares? So call it $2.6 billion of cash in the bank-ola versus maybe only about $140 million of current liabilities like bills to pay. Holy smokes, this is really well capitalized. I mean, you have 18.5 times as much cash as you actually have current expenses. And I think the big reason here for that is the company is basically paying everyone in stock comp. It's phenomenal how much money they spend in stock comp. I mean, look at this. Their sales and marketing expenses are sitting at about 700 mil. Here, total up OPEX for a moment with me. Go down this journey with me. Look at total OPEX. You're sitting at $1.65 million for the year end 2022, right? We'll go over now to stock-based comp for the year end. You're looking at 30% of all of their operating expenses just going straight out of the shares rather than cash. And that's letting them build up this cash war chest, which doesn't really matter what they do. As long as you believe in the leadership there, you would expect that cash could be deployed well, especially in the SaaS biz. And really, a lot of companies that have this much cash, what they end up doing is they end up blowing it all on sales and marketing. In other words, they just can't help themselves. So they spend everything on sales and marketing to prop everything up as extremely as they can during the good times. And that could be really dangerous because then they don't have any cash saved up for the bad times. But look at this company. This is almost all you really need to know to see that this company is actually, and I'm not invested in this company, but it actually goes to show you, they're being very conservative here. They grew their sales and marketing expenses at just 17%, whereas look at that, their revenue grew at 17.5%. You grew revenue more than you grew sales and marketing. That's number one criteria right here. This is great. This would be concerning if the company here plowed all of a sudden, 50 to 100% sales and marketing growth into sales and marketing and only grew revenue at 17.5, right? But the fact that they're roughly matched here is phenomenal. And then look at this. They actually cut spending on research and dev and G&A, showing they're working on their operating leverage, their operating efficiency. Look, you know what? This is pretty impressive. I have to say, props to Palatir here. This is a very, very impressive statement. I mean, even if you take out their other income of this $44 million of question mark money over here, even if you take this out, $17.8 million of a loss for a company that has 2.6 in the bank, that's a joke. In other words, it's really, really good. You can't poop on this company, especially not with nearly an 80% gross margin over here and operating leverage that's actually increasing. This is a very impressive report. I mean, this is a company that honestly, it deserves to be up 18%, maybe even more because, wow, congratulations. That's all I can say for Palantir. That's great. Now, what we might do in the course member live stream is go through the earnings call and get a little bit more color in terms of what the executive staff is thinking for the company going forward, and how much are we growing that commercial side of the business. I'm a big fan of seeing growth in the commercial side of the business for Palantir. They've also obviously got the buzzword of AI, but it's more than just a buzzword for Palantir, really. With Palantir, you actually do have the basis of what they do, the software they provide is artificial intelligence. I mean, it's originally it's been considered your government version of Snowflake. Obviously, they're different, but they've got similarities in that let's give you a lot of data and you start making connections, whether that's on their Gotham business for public safety and public security. But think about just the idea about police forces. And it's also kind of scary. Police forces, for example, loading just all of their big data in and then getting reports back that say things like, hey, the AI thinks we might need an officer on 32nd and Broad today. And then all of a sudden, they prevent crime because the AI suggests, hey, we might need someone here because crime is statistically increasingly likely to happen in this particular area today. It's phenomenal. And I'm just scratching the surface of really what this kind of software can do. Honestly, my explanation is like oversimplified. It's like a 5-year-old example of what this stuff can do. But now multiply that by the entire government, the CIA, the FBI, police forces across the United States. Kind of scary what this stuff can do. But it's also really incredible from a logistics point of view, what these folks can do for commercial enterprises, shipping, logistics. I mean, it's scary, but then again, we're going into a big data and world of AI. And somehow they figured out how to make it wildly profitable with a whole lot of cashola. So look, even though I'm not in it, I have to say this looks pretty sexy, and it makes it sound like
Bye.
yeah.